Hello, welcome to Secure Talk, your trusted source of information on the latest threats, trends, tools, and technology related to cybersecurity.
Hello, everybody. Welcome to Secure Talk. My name is Mark Schreiner, and I will be your host for this episode of Secure Talk. Today, we are going to jump tracks a bit and talk about DeFi, blockchain, possibly a little crypto. We're going to be talking with the founder of Parallel Finance, Yubo Ruan. Yubo, am I pronouncing your last name correctly?
Yeah, sure. It's Ruan, but
Ruan.
Yeah.
Okay, Yubo Ruan. Yubo has a very impressive background. He's 25, 26 years old. I went to his LinkedIn profile, and he already has 14 different organizations in his experience section on LinkedIn. So he's got a ton of experience, mostly in this area, and we're gonna kind of do a deep dive on that. But before we get started, let me just welcome Yubo. Yubo, how are you today?
I'm doing great today. Thank you so much for having me here.
Awesome. And I believe that you're based in the Bay Area.
That's correct.
Good. I'm on my way down there shortly. Tell me the weather's nice.
It was amazing. Incredibly nice.
That's great. I'm looking out my window here and I see snow-capped mountains, and I'm really tired of this super wet weather that we've had up here in Seattle. Yubo, before we talk about the specifics of Parallel Finance and what you're doing, can you kind of give like an overview of, generally what is DeFi?
I think that decentralized finance it's another type of sort of financial system where users are able to control their asset through a set of private keys. Then the other really big thing is that the application itself runs on top of a self-executed smart contract, which is secured and run by a blockchain system. Contrary to the traditional finance, right, all of the applications are, relatively speaking, immutable. It follows the code, and then it is, relatively speaking, open source. And so those are the main difference between DeFi and CeFi.
Okay. So let's break it down to like a user experience, and then let's talk about like maybe a company or a platform. As an end user, if I'm using some sort of DeFi platform or decentralized finance platform, what does that look like, and what does that mean to me?
Yeah. So right now, the way to use DeFi is through web applications. So if you happen to own a bunch of cryptocurrency like stable coins, USDC, or a cryptocurrency like Ether, Bitcoin, whatever you have, you can go to Compound, Uniswap, Aave, and go to their website and then connect to wallets through the browser wallets, and then you can start to do earning yield, doing trading, to do staking, all things like that. And then the sort of the current stage of the DeFi is mainly designed for crypto holders, and then it is designed for crypto holders to increase their yield and then to be more, to enjoy all kinds of financial services. However, in the long term, this type of services can expand toward more consumer-oriented, apps that you can do payments, that you can earn yield, and things like that.
Well, that's actually brings up one of my next questions is, one of the, I guess, detractors from crypto is the fact that it's basically, it's kind of a speculative bubble, depending on which currency you look at. And there's very, very little is actually being transacted, or very few cryptos are actually being used for transactions. What's your take on that? And when will we see cryptos being used more to transact big business?
So I think the previous generations always believed that Bitcoin should be the payment centers, but however, it has very big price volatility, so it's pretty hard to do, and it's very expensive to do transactions. The current sort of the current years, a lot of people trying to do stablecoin payments on Ethereum, which also doesn't work because of the high transaction fee and low TPS, or transaction per second. Ethereum has this 14 TPS, and compared with Visa, which has over, I think, 20 to 30,000 TPS at least. So it's not that usable in the real life. In the long term, which I think in the next 1 to 3 years, most of the
That's funny. I think that shows your young age. When you say the long term is 1 to 3 years, so I
yeah,
think people my
exactly.
age would get the humor there. But go ahead, please. In the next 1 to 3 years.
Yeah, in the next 1 to 3 years, quote unquote long term, I think layer two would take a majority of the computations and transactions out of the layer one, and layer one would transition toward this sort of role-of-centric roadmap, which means that the basic layer blockchains would do the proof verification. The computation and transactions happen mainly on a specific layer two, so the users will be able to transact at much higher TPS. I think some of the major technology can provide anywhere between 2,000 to 20,000 TPS, depends on the layer, the base layer shards. You know, that's also happening in 1 to 3 years. Depends on how Ethereum 2 going to scale up with different shards. If that happens, yeah, I think stablecoin plus that is transact on layer 2 can be likely to be a very strong alternative to payment, you know, like a network like Visa or Venmo or things like that. It has similar, at least like similar, you know, settlement speed, or even faster, and it provides a much better sort of you know, system where it is way more globalized. That is not restricted to any geographic like locations and you know, jurisdiction
Now,
rules.
this maturity, is this just in the hands of Ethereum, or is this more of a kind of industry consortium that is working towards a common standard?
It is an industry consortium, and then it is the end game for all of the blockchains.
Okay. And you know, you mentioned Venmo, for example. Explain to me, because you know, Venmo is relatively mature compared to what you're talking about, that is going to happen in the next couple of years with the Ethereum platform. But what would be my advantage from an end user, and then also, let's just say, for a small to medium sized business, what would be my advantage to using this platform versus something like Venmo in both situations, as an individual and as a business?
I'm gonna start with the hard side of the business, which is the merchants,
Okay.
small business, because they are the one that have to accept the payments. Otherwise, there's no point of using it as a consumer. For end business, they care about, especially for small size business,
Hmm.
they really care about the cost of,
The
you know,
transaction costs, those
yeah.
those those pesky credit card companies eating into my profits, right?
Yeah, I'm not sure if you guys have experience with, like, you know, dealing with I guess like for example, like movers, taxi drivers, or tattoo stylists, what have you. They all prefer cash. Then they really hate this 2%, 3% sort of Visa settlement fee. It actually
Right.
matters a lot because their profit margin is very low, especially small restaurants as well. And then I think the other one would be really just how to, you know, how can we better engage with my customer? I think
Hmm.
crypto provided an amazing way to sort of build this community that you know, the customer feel belongs to a specific protocol or products. And so the rising of the NFTs give us an inspiration of a new kinds of way of engaging customers for the small and medium-sized business, where they essentially, so instead of building a art or collectibles, they can issue a utility-based NFT to represent their gift card, to represent their coupons or their VIP status to their customers. And then the owners of those utility NFT would be able to join some sort of you know, groups like on Discord, you know, Reddit or Telegram, what have you, and to better maintain this sort of long-term customer relationship and feel this ownership of, you know, as a already membership versus you know, like the you know, small medium-sized business do all the tech themselves. It's complicated. So the last one is obviously like earning yield for business, because crypto has this amazing way of cutting middlemen. So the yield on most of the sort of lending protocols are actually higher than the commercial banks, you know, saving rate, way higher, like 10 times or sometimes 50 times higher. And then the crazy thing is some of them doesn't have credit risk involved. It's all over collateralized loans by other like highly traded cryptos. And then so on the other hand, for consumers, I think the biggest advantage would be obviously like the yield and cashback. So because it's directly connected to DeFi, right? Consumers might be able to earn this native, I don't know, like anywhere from, not financial advice, but I think if we can truly onboard a lot of assets, to the lending protocols, maybe people can earn at least like 5 to 10 times, the yield from a commercial bank. That actually
How? Where is that yield coming from?
the yield is coming from cutting the banking industry's operation cost.
But then what you're saying is the platform provider would provide either a yield or at least the savings. I mean, the savings itself, I'm not going to pay an ATM fee. I'm not going to have monthly banking fees. I'm not going to pay a credit card fee, or my interest rate's going to come down. I get all that. But that's a savings. But are you talking that there's also going to be a yield or a percentage earned by the crypto holder?
Yeah, 100%. So, so as a consumer of using this app, users are able to sort of lend out their unused cash toward a decentralized DeFi lending protocol. And so on the other hand, the borrower have to over collateralize their sort of that position, right, by providing some kinds of asset, right? It could be Bitcoin, could be Ethereum, that is over collateralized by, let's say, 150%, right? There will be an efficient engine to liquidate whenever the asset price drops, they will liquidate to the cash to maintain the sovereignty of the protocol. So there's no credit involved, right? No credit risk involved. But however, commercial bank is more like a black box where they have this sort of reserved minimum reserved ratio, like 5-10%, and then they can just lend out a bunch of money to business where sometimes they are under collateralized, so you don't know exactly if that's going to have any issues happen in the long term. But like sort of DeFi at least is open source, like anyone can see what is on the balance sheets and what is going on, and because it cut it all of the interest rates in between, so the business model, right, for banks are essentially they're taking the interest rate difference between lenders and borrowers. For DeFi, there's no fees like that, right? Even if there is a fee like that, they will be distributing back to the token holders. So I think the higher yield come from this, cutting the middleman, mainly.
You just listed off a large number, an impressive list of benefits, and my mind was blown a couple times. One is the whole utility NFTs. I haven't heard of that, and I thought of NFTs as typically, when you take an art, you create a digital artwork and turn it into an FT or something like that. But in terms of there's differing opinions whether that's just a trend that's going to go away, but the way you describe these utility NFTs, I totally can see that in terms of building a community, supporting your local restaurant, etc. I mean, I'd be ready to invest in my favorite places right now. It's just that's brilliant. So thank you for sharing that. The other benefits make sense as well, but let me ask you, how do the platforms, if they're not charging the fees, etc., how do they make money?
They usually they have a token, and then there will be a very little fees involved, like a few basis points that is transparent, and then the fee would actually go back to the token holders. So that's kind of how it works. And then usually the platform has way lower operation costs or cost of goods sold, because the blockchain is the execution layer instead of human operation in the bank. The users usually pay transaction fee themselves. Right? Think about this: the user already paid sort of a global network of computer who can make sure that your transactions are correct. So that is already sort of getting the majority of the business done. The bank itself is a ledger of users' balance that you're kind of moving the bits around different accounts. And then if the blockchain can already secure the computational results with the integrity, then users are already paying for that, so that's okay. And then the rest of the cost will be just the founding teams building it, and then maybe their VC's cost or whatever. And I think usually people charge, protocol charge either 0 or they charge anywhere from a few basis points to maybe max 20. And then the fees will go back to insurance pool or go back to the token holder eventually. So I guess, yeah, there may be some fees, but at the same time, usually the protocols would actually give token to users. It's like if you use Apple product, you get Apple stock. That actually encouraged the better loyalty involved. So, as an early adopter of the protocol, you got some shares where I'm not sure if it's a good idea to describe this way. A lot of companies want to present themselves as the commodity. So it's like you're getting like a commodity from that company that represents some levels of governance, right, and then some levels of economics, right.
Sure.
And so, yeah, even if they charge some money, eventually go back to benefit the user.
Yeah, I mean, I don't know if that's the right word either, but like up here we have REI Co-op, right? And if you shop at REI, then you get credit at the end of the year for your purchase that you made, which makes you want to go back and spend more money. And yeah, anyway, hey, I one little comment and then a question, and then I want to dig deeper into parallel finance. But I'm not a big fan of traditional finance, and you use the expression CeFi. I'm assuming that refers to some type of centralized finance, or what is CeFi?
Yeah, it's centralized finance.
Centralized finance. Okay, so and I just a recent story. I had a retirement account, a 401k. That I had been sitting for a while, and I wanted to get that money and enroll it into a rollover IRA. So the process goes like this: you fill out paperwork and you send it in, and it takes almost 2 months for them to cut you a check and send it to you. Okay, or to me it did, and this is from one of the largest 401k companies providers in the U.S. So I'm like, so they sold all my holdings in the 401k like within a week, and the money just disappears. It's not showing up on my in my account, and it took me 2 months to get the money back into. So I'm like, where is that money? I mean, somebody's making money from that money, and there's no visibility at all. You call a 1-800 number, and you get connected with a call center in Cebu in the Philippines, and it was just like there's so many ways that traditional or centralized finance is hugely inefficient, but for so long we haven't had options. And what you're talking about is going to put pressure, hopefully on a lot of areas, and eventually on scenarios like that I just described. Okay, I'm going to get off my soapbox right now, and then and come back to what you're doing. Before we jump into the specifics of Parallel, I noticed that most DeFi they're building upon the Ethereum platform. In fact, I went to recently. I looked at the DeFi Pulse. I don't know if you're familiar with that site.
Mm-hmm.
Yeah. Are there, just before we move forward, are there any other competing platforms with Ethereum, or is it pretty much gonna be Ethereum?
I think that we can use some sort of a metaphor to think about, sort of this blockchain war. Each blockchain sort of provide a kind of like a geolocation, like a country, and then there are like banks inside of the country, right? So you can build a bank for a specific country, but there are other countries that users are interested to move, and then they like different cultures, they like different type of security system and different type of speed of the the city move or the nation move. So there are a couple, I think. So if you look at a market cap, it would be ranking basically from like Solana, which is like I think Binance Smart Chain, right after Ethereum, that's like pretty much like 20% Ethereum market cap, and then Solana, which is like likely around 10 to 12% Ethereum market cap, and then Terra, Polkadot, Avalanche, Polygon, a few others. And then if you look at DeFi Llama, and it's ranked by chain, I think sort of obviously Ethereum take over more than 65% of the TVL market shares. TVL stands for total value lock, which is the total dollar value of asset that is locked up into a contract, right, on specific chains. I think, yeah, there are a lot of competitions right there. Different chain provide a different trade-off between essentially security, decentralization, and and then scalabilities. And I think users have this own preference, so that you can see different things out there.
Well, and one more question on that front. In other industries, typically, in the beginning, you'll have very fragmented market, and then you get some kind of consolidation and an acquisition process. Is that same thing possible with competing platforms in DeFi, or the platforms so disparate that there's no way it's going to be either this or that?
Yeah, I totally think so. My observations of basically human history is you can describe it like into one sort of sentence, which is we always transition between uh, decentralization to centralization and back to decentralization. If you look at a technology adoption curve, at the beginning, when everyone is like, when the technology is so new, where innovators and early adopters are using them, usually the markets are super decentralized. There are, hundreds, dozens of hundreds of thousands of, companies out there building applications. If you look at .com, before .com bubble, basically it's thousands of, everyone's like .com company, everyone's like millionaire right there. And then as the adoption curve go to the early majority stage, the winners would have much better sort of advantage, especially given the fact that there will be a network effects. So they would have better sort of capital user base, and they start to outcompete with other smaller players, and then they start to eat out every other people. So it started consolidating. And then once we go to this sort of late majority adoption curve, the most of the people are going to use this technology, and this technology is just going to stop innovating. And then it's kind of achieving its potentials almost. And then so at that time, usually we'll see like five-ish big players out there that handles almost every aspect of a specific tech sector. And then this late majority, and then just basically the rest, a few percent of people gonna use this new tech. And what happened is that that takes 10 years, 20 years, or maybe 30 years, and then there will be new tech that will build on top of it, and that will be taking care of another sort of big tech revolution. And so the same process would happen again. Blockchain specifically is at its early adopter space, where we can see like maybe hundreds of millions of users max, maybe truly DeFi users. I think it's less than 50 million users, or maybe just 20 million users out there. We see like thousands of DeFi companies. Everyone is building a DAO. Everyone can launch a token. It won't be the case after 3 years in the long term. Again, all of the companies will consolidate. Polygon recently acquired Mir for $400 million, acquired Hermes for $300 something million or $400 million. Breyer Capital merged with Fei, and then like Avi starts to build like social network on Ethereum, and building Avi V3 that is trying to take over the L2 space. And so it's very clear that I think the bigger winners can come in the next 3 years ish. I think eventually maybe I'll say like five-ish pretty big players, and then yeah.
Okay, though that totally makes sense. So with all these different variety of platforms, but also DeFi providers, and why, what was the impetus for you to found Parallel Finance?
Well, we wanted to sort of bring DeFi to 1 billion people. Like now,
Is that all? 1 billion people?
1 billion people as a small goal to get started. And I think we want to get it now, like as soon as we can, versus waiting for someone else to build.
Mm-hmm.
And I still think that the opportunity here is that most of the transactions and users will move to the second layer network, especially layer 2 and layer 3. It's also like in the next 1 to 3 years, there aren't much of good DeFi applications out there, and this super sort of blue ocean. And I think that would be a really big space for us to pursue. And then this layer of network truly provide this scalability and low cost, which I think can bring 1 billion people to use. So we're kind of thinking that we want to position ourselves to be this application layer versus infrastructure layer. And then we wanted to build on any platform that has tractions and have a lot of user base. And then we kind of building this whole suite of products instead of one. Usually a company build one, we build a combination of the basic primitive protocols, such as like lending protocols, staking protocols, trading, and all things like that. Those are like major demand, the big demands for users. And
So are you going to be providing services directly to users, or are you going to you're building these, for lack of a better word, modules or protocols, and then licensing them to other organizations to deal with consumers or businesses?
we want to build both.
Okay.
We really like these sort of Apple approach. It's end-to-end control. I also think that the second model works. It's more like a Microsoft approach where you build like maybe software and you license out for all the hardware makers. Either one works. It's you have to choose a path and go really deep into it.
Okay. So where are you at right now in terms of going to market with any of your apps or your suite of services?
Yeah. So we are currently having around 155,000 users, and then we have around $600 million capital using our platform, and we are the number one DeFi provider in the Polkadot space. And then we compare with the goal of bringing DeFi to 1 billion people, we still need basically 10,000 times our user base and potentially 10,000 times the asset, the TVL as well. It's a small step, and then we plan to start to build applications, especially DeFi's, on layer 2s, and then like prepare a bit earlier on ETH. But we also like looking forward to a bunch of other alternative sort of layer 1s.
Okay,
Yeah.
so before you go too far, first off, could you explain what the Polkadot quote unquote space is? And then let's go back to those 155,000 users that you have. What are they actually doing?
So Polkadot is a layer 0, where people can build a layer 1s on top of Polkadot. It's a framework of building a blockchain, and it is currently a top 10 coins globally, and then it has a pretty amazing founder's background. So the former co-founder and CTO of Ethereum built Polkadot, and then it has amazing technology, sort of stack that it provides. And so essentially it's also similar to the smart contract platform, but it's one level deeper. For the second question, the current 155,000, or maybe right now it's like 165,000 users, they are essentially doing something called auction loan, which is one aspect of the core DeFi protocols that we offer, where user can sort of stake their dots for over 2 years in exchange for some the participation of a specific pair chance token rights. And then we also provide the derivative toward this locked dot so that they can do trade, borrow, lending, and all things like that, and leverage as well. So yeah, we also estimate that the numbers of users and then the tractions will grow, double or triple once we launch the core set of protocols on Polkadot, which is essentially the combinations of lending protocol plus the trading protocol plus another staking protocol, all combined. So that would be a big thing Q1 for this year for us.
Excellent. And apologies, but I'm not as well versed on crypto blockchain or any of this, not even near as well versed as you are. And I think some people in our audience probably are similar to me. Explain in layman's terms, what these 155,000 people are, what are they doing? Like, how do they sign up for the platform, and how do they actually use it?
Yeah, it's super simple. They just need to download the wallets, Polkadot.js, and if they have some dots, then they can start to connect their wallet on their web app, and they can start to use. I think the app is very straightforward, and
so they basically can put Polkadot coins. Is that what I
Mhm.
call it? Yeah, into your wallet, to the Parallel Finance wallet, but it's actually their wallet, right? And
Mhm.
then they can use it to transact.
Correct. Yes.
Okay, got you.
All kind of
Okay.
things. Yeah.
And why your wallet or the Parallel Finance wallet versus some other wallet?
So wallet technically just a uh, introduction middle layer between our app. We do not own the wallets. Anyone can build any kinds of wallets, open source.
Hmm.
The app that we built is this backend protocol where people can do like borrow and lending, which is
Yeah,
essentially
okay.
this autonomous like driving banks
Hmm.
plus like autonomous driving robot advisory plus like this autonomous driving Nasdaq kind of thing. So
Okay. Well, I'm gonna be your 150,001 registered user after we get off this call. I'm curious how it looks. Um, Let me ask you how. I mean, how do you deal with security? Because it's got to be really important, both from the company point of view, but also from the platform point of view. And is this like one of your top five concerns? Is it your number one concern? Where's it at on your radar?
security is my number zero concern,
Okay.
and it's the one before zeros.
Okay.
So basically, without a security, there isn't anything valuable to the platform, and um, typically, I think 5 to 10% asset have been hacked before in any DeFi protocols. I think there are around 200 billion worth of dollars that is using DeFi's in total, including derivatives. And then I think I don't know, like the current data, maybe at least like over billions of dollars has been hacked, or a couple $1 billion hacked. So I think few percent has been hacked. Uh, Eventually, this number going to go down. At the beginning of the industry, I think it will be remain like 5 to 10% as the industry standard, like kind of the average data. Um, we try to make sure that it's going to be zero on our platform. But I wanted to take a non-deterministic approach. Just have to like try the best, and also we hired the most expensive and the best like world-class security auditors, hackers to sort of try to break the system, and then we are constantly improving on it. So yeah.
Okay. And does your app have some type of authenticator or second factor authentication baked into it, or?
Um, no. So the thing here is that different than Web 2, Web 3 um, allows users to sort of directly get access to their asset if you have the private key. So usually Web 2 company, they help you store your like your private key or your accounts or your
Hmm.
password they save for you. We do not, so the user actually control those stuff. And as long as they have valid signature, then they can do things they want. And in terms of security for DeFi, it's usually meaning that the security from a smart contract, if there's any bugs or anything that can be sort of exploited by any hackers. So even without the user losing any private keys, some funds might be hacked. So we're trying to prevent that thing from happening. But if the user lose their key themselves, right now it's impossible to recover. However, we're um, sort of thinking and deploying some solutions for something called social recovery, where if you lose your private key, um, don't worry, you can have like 3 to 5 institutions or friends, whoever that you trusted, that can help you recover, and so you can get access back to their asset again one more time. And I think that's critical for a billion people to use. So yeah.
Totally. And I think that's one of the classic horror stories of crypto is people who've, thrown away the hard drive or somehow lost their keys. You know, uh, but if you can solve that, or if the industry can solve that problem, I think that's one of the last remaining barriers or concerns. Um, you tell us a little bit more about the evolution of your business, where you're at right now in terms of funding, road to profitability, if that's even important to you at this point, And then what's coming, in the second half or later in 2022 for you?
So I think profitability will be like a like a P3, P4. Not super important. I think getting users happy is the most important thing, and getting their funds secure and earning yield is important. And Q3, Q4 will be the time that we were for sure like spending toward layer twos, and then provide whole suite of DeFi protocols out there, and then also we'll be sort of expanding on that ecosystem as well. And then after around 3 years later, we will start to tap into the consumer finance space, where it's just more like directly target to consumer finance. That will be the sort of 3 to 7 years plan. 1 to 3 years will be mainly on dots plus L2s, or alternatively L1 will be the main like markets that we're looking after.
Excellent. Well, it looks like an exciting roadmap. What is your biggest challenge right now?
I think it would be something related to like I think getting scale the team is definitely a big challenge for me. We currently have around 52 people, and with the vision that we have, it probably requires us, I mean, eventually within 10 years, at least like 10 times the size or 20 times the size, or even bigger than that. I do not have a specific number, but I think it will be a challenge for me. However, that's not rocket science, it's solvable.
Sure. I mean, there's a shortage of engineers across. I'm talking about software engineers, of course, and developers across so many different industries right now. I actually spent 5 years in Japan, and if you think the shortages are bad here, try going to Japan. They're just, I was involved with some large outsourcing projects where Japanese companies were having to offshore so much development just because you can't find talent in Japan. And there's a huge geo arbitrage opportunity there as well, because the hourly rate in Japan would be double what it is here. And then if you can offshore it to someplace, obviously India is one of the obvious choices, but there's great geo arbitrage opportunities. But then you have communication and cultural issues as well. But anyway, scaling with people right now is a huge challenge. You've shared a lot of information, and I'm sure we've just scratched the surface of what what you know about this space. Let me ask you, where do you go to kind of keep abreast and understand what's coming down the road for this whole space?
I think it comes down to one, talk to the industry sort of leader in this space, to pick their brain and share ideas. And second, I think you have to think about where does those information store at, right? Where can you get it? The other one would be, I think, through like some really awesome papers, or like just purely like doing research on different projects. And then I would say that there are 100 people in this space, like in the DeFi space, or like 50 people that are very, very promising. And I think that if you can follow them on all of the social platforms, and or better to just chat with them in person, and I think you have like all of the latest condensed and processed sort of insights into the space. And at the same time, there are a lot of really, as I said, like a lot of really good paper out there. So
and is there, I mean, do you have a preferred platform for following people? Is it Twitter or another platform?
It depends on that specific person. Some, I think Twitter, yeah, and YouTube, and then see Telegram.
Okay. Yeah.
Or honestly, just go to events and chat with them. It would be helpful.
Cool. By the way, do you watch the All In podcast? Are you familiar with that?
All In podcast?
The All In podcast. Yeah, it's.
I heard about it. Yeah.
It's over the last year has become one of the top podcasts globally, and it's basically for three Silicon Valley billionaires and one,
Yeah. I
Jay
heard
Cow's
about
worth a couple hundred million, and
that.
it's interesting. They talk, and they talk about everything that's going on in Silicon Valley. They talk about politics and a bunch of other things, but they do cover crypto and DeFi, NFTs, etc. Definitely not a deep dive, but they have some quite high level kind of opinions. So it might be worth you kind of just pulling up their episodes where they do like a year-end predictions and things like that, and it's interesting. So do you, aside from this podcast, that was a joke. Are there any podcasts that you follow or you prefer for the DeFi space?
DeFi space, if you look at podcasts, I think I think Bankless is pretty cool.
Bankcast?
Bankless and
Bankless.
Both of them are pretty cool.
Okay. I'm gonna check it out, and I have no problem at all promoting. It's not even competition. It's just promoting other podcasts because I think it's all about sharing information. Last couple questions. Yeah, actually, it's interesting because I think you're originally from China. You were born in Beijing. You're living in the Silicon Valley right now, and right now we have this. Actually, isn't it like New Year or Lunar New Year, Spring Festival right now for China?
Correct.
Possibly. Okay. So, but it's an interesting dynamic right now between the U.S. and China, and there's also kind of a different approach that China's taking a different approach in terms of how it's going to manage or kind of monitor crypto and DeFi and blockchain. Is that on your radar at all, or do you focus on like the U.S. ecosystem only, or Western ecosystem, or do you take a global look at things, or what is your take on that?
I started to build fintech stuff like back in when I was in high school in 2014-ish in China, and I like see clearly. Actually, I witnessed the transition from cash to cashless payments, like basically from Visa cash directly to like Alipay, WeChat Pay. So I think specifically the Eastern culture, especially in China, has always been very top-down approach. If the top-down decided that we wanted to go cashless, and then it would support everything, and then the transition can happen within months or even within like 2 to 3 months. I still remember how fast it happens. It just like almost, I think maybe like 2-3 months, and suddenly everyone stopped using cards and stopped using cash, and everyone started to like scan QR code. That's how fast it can be. Like the whole whole country. This is like blow my mind at that time. And blockchain, on the other hand, I think is not the favorite baby for for probably for Chinese government. I think it is very hard to be because of the currency control and some other sort of differences here. However, I do see that they are going to publish. Actually, they had already pushed the CBDC out of a couple cities in southern China. It's been running really smooth on your phone. You can just pay each other instantly fast, and I think in China the blockchain DeFi landscape is probably not going to call DeFi. It's going to call like CE DeFi, like C DeFi, like a centralized DeFi, or more like a CCP DeFi, where it's customized, right? It's
Sure.
It have to be like this way. And then I think people we have to think about this. People really care about decentralization. Like, is that really the most concern? Or if it's not, then like people are kind of okay with like, even if there's a central point of control. I think if the users are fine, and I think it's probably going to be very different landscape.
Yeah, I might agree with you that I actually users anywhere, they just want better service, lower fees, safer transactions, right?
Exactly.
I mean, and what you call it and what's really going on behind the scenes. I don't know if I'm sure there's some ideologues that really care, but for your typical consumer, I think you're right, and especially in China. I mean, it's interesting. I lived in Asia off and on for about 20 years, and I've been doing business in China for most of that time.
Mm.
Never lived there. Lived in Hong Kong, Taiwan, so on. And when I would go to China, and from the outside looking in, you would say, "Oh, well, there's the Great Firewall, and people are controlled by the government, and sometimes the word oppressed would come up and things like that. But when you go there, I don't get that feeling. I think that people like anywhere, sometimes they resent what their government does, but for the most part, people just move on and they're like, hey man, things are getting better in China. They're way better now than they've ever been in terms, well, I'd say ever, but yeah, probably ever.
Yeah.
you know? And yeah, I mean, is it perfect? No, but for your average person, at least and I was always on the big coastal cities. For your average person in the big coastal cities, people were pretty darn optimistic and it seemed to be okay. And the amount of innovation that you come up with if you look at things like WeChat, the innovation on that platform and all you mentioned Alipay, for example, and Alibaba's platforms and how many different directions it's gone is really amazing.
Yeah, it's pretty impressive. And sometimes I even question myself, would China need DeFi at all? Because people use WeChat Pay and Alipay, it has like, you can earn yield easily. You can pay people with almost like instant payments, right? It's not like Visa card. And I'm sure that the fee between, like merchants and consumers are extremely low. And, from security standpoint, it should be pretty safe. And then it also has like a bunch of functionality where you can use WeChat Alipay to pay utilities, pay almost everything.
That's amazing?
Yeah,
I remember it was a few years ago when they announced that like people were doing their Lunar New Year or Spring Festival, whatever you call it these days, their gifts to their friends via I think it was Alipay or maybe it was WeChat, I don't remember, but it's just like it's so cool,
Yeah, the airdrop money, like China has been airdrop money to like users like since like maybe 2014, 2015 when we watch the show every year, the Lunar New Year shows, and they will literally like send like hundreds of millions of dollars to users directly to like the lucky users who somehow participate. And they've been doing airdrop for a while. I feel like all of the DeFi stuff, at least from like ideology is different, but then the consumer benefits have had already achieved. So I kind of question myself, okay, if CBDC is going to push out and then if they have all of the functionalities involved, then would we still need it? Like, would China still need a DeFi anymore? And then if it needed it, then the question is if it's going to happen or not, right? Maybe the first question is if it's needed or not.
Right.
I feel like the marginal benefit is very low. It's like China has already been on the layer 2. It's just WeChat layer 2 or Alipay layer 2. And then maybe here we're still sort of directly interacting with Visa and banks, which is kind of, very old. So, yeah.
And very annoying. Dude, I mean, the credit card companies, I did my last little rant, I recently signed up for a new credit card. I'm in a store and they're like, well, if you get our credit card, we'll take, I forget what it was, 20% off my purchase or something. And it was a sizable purchase. So I was like, yeah, give me the card. And then they didn't send the statement. And so my first payment was late. And what did they do? They dinged me a late charge. So of course I canceled the card, but it's just kind of like, come on, people, man, there's got to be a better way.
Yeah, that's crazy. I've been losing my credit card for in the last few years. Every year I accidentally lose one card, and just pain in the ass for sure. It's not secure. It basically means that your private key is written on your wallets, right? People can read it, they can steal money. It's crazy.
Exactly, and you don't even have to lose your card with the scanning technology. I mean, every time you put your card into an ATM or when you're buying gas, whatever, if they've got a scanner in there, they can get the chips. The chip supposedly works around that. But anyway, hey, Yubo, I've really enjoyed this conversation. This has gone almost double the length of our typical episode, and we've covered a lot of ground, and I'm sure we could go a lot farther. But I really appreciate you taking time. I'm going to be downloading your app if I can figure out how to do that, which should be able to do. And wish you and your team an amazing 2022.
Yeah, thank you so much.
Hello, welcome to Secure Talk, your trusted source of information on the latest threats, trends, tools, and technology related to cybersecurity and compliance.